Today, we will explore flexible financing options for SMEs and the evolution and future of crowdfunding.
New entrants are typically disruptors. We brought a new concept. We almost self-regulated ourselves.
What is the top challenge you have seen SMEs?
You'd be surprised at how many SMEs don't have clean books.
What is the future of SME financing?
As more companies look to move to digitization, it will streamline lots of areas of the economy. For SMEs, they will start to take the right finance product for them. Match your financing requirements to the borrowing that you take.
You probably also bring the trust, the track record as well.
I'd be lying if I said it was my charismatic personality why they signed up. Gone are the days where you can just burn through cash and not really have a plan for profitability. We will continue to bring new products out into the market. I'm very optimistic. I think growth is there.
Welcome to Access Tomorrow, where we dive into the world of payments, innovation, and commerce. I'm your host, Leila Serhan. In each episode, we'll explore commerce from various angles, from the viewpoint of small business owners to the wider perspective of financial institutions. We'll uncover what drives success and explore ideas and strategy that fuel growth. This podcast is brought to you by Visa. Today, we will explore flexible financing options for SMEs and the evolution and future of crowdfunding. We are joined today by Greg Moore, founder and CEO of Beehive, UAE's first peer-to-peer lending marketplace operating in the UAE, KSA, and Oman, which he founded in 2014. Just before that, he founded Butterfly Software, a UK-based business data analytics and migration software company that was acquired by IBM in 2012. Beehive connects SMB in needs of financing with investors through a streamlined digital avenue and which bypasses traditional banking hurdles. For investors, Beehive presents an opportunity to invest in the growth of regional businesses through a transparent and regulated platform. Beehive was recognized as one of the top 25 fintech companies in 2022 by Forbes Middle East. Greg, welcome to the show.
Thank you very much.
So let's dive in and talk a little bit about how SMEs are navigating today financing obstacles, right? So we know that they face a lot of challenges when they want to get some financing, sometimes from tough lending criteria, high interest rates those days. What is the top challenge you have seen SMEs in this region, and how do you think they should overcome it?
Yeah, so I think one of the major challenges that we see when we're talking to SMEs is, the cost of finance is obviously important,
of course.
And that will differ market to market. But one of the real focus points is time to finance. Okay. When you're an SME, you're typically taking money for an opportunity. So if you buy stock, sell stock, you've seen an opportunity, you want to buy some stock, you want to turn that for 50, 100% markup, whatever that may be. Or you're looking to hire a couple more people in order to grow your business. What tends to be important is how quickly you can access finance. And one of the major frustrations that a lot of SMEs have is that when they deal with traditional lenders, they interact, provide the information, then everything goes quiet. And they don't maybe hear anything for 6 or 7 weeks, and it's with credit, and we'll give you an update when we get an update. And that can be frustrating on its own. But if the answer is no, it's even more frustrating.
Yes.
So time to finance is incredibly important. And I think also alongside that is communication. So, some banks or some lenders will not lend to an SME. I think what's important is the SME finds that out very quickly rather than, pinning their hopes that 8, 9, 10 weeks later they're going to get the finance. So I think that's one area in particular. Second area is it's really important that an SME has the necessary information at hand, right? So an SME owner understands their business. They can come, because every time you do any kind of assessment, it's going to kick up some follow-on questions, right? Why is this? Can you talk a bit more about these transactions, et cetera, et cetera? And the ability to give confidence to the lender that you understand your business, you can answer very quickly and easily points that are raised, all goes into the mix to give the lender comfort that you understand why you're taking finance. Right? Yeah. You understand why you're doing it. You understand where that money is going to go, what you expect from the investment of that money. So I think a lot of it is about that communication. It's the time to finance. And the more that SMEs can be prepared, and obviously that then rolls on to things like keeping good financial records, having up-to-date information. But that goes a long way, because you'd be surprised at how many SMEs don't have, clean books. They don't keep information up to date.
And in your work as Beehive, how did you help them actually overcome some of those?
Yeah, so one of the things that we did early on is really work with our BD and our channels to market to kind of create the kind of sniff test. Right. So very quickly, you're asking a bunch of questions that you can tend to get a really good feel early on, whether if a business is obviously telling the truth to those questions, there is a good chance you can give them a fairly clear steer to say, listen, based on everything we've heard, I think there's a good chance that that you'll be able to get finance, or based on what we've heard, I think you're going to struggle because of X, Y, Z. So again, a lot of this goes down to the customer experience and being able to be very transparent and clear with the SME to say, if you can provide this information or you can answer these correctly, or to a sufficient level of comfort, then there's a good chance that you get finance. And then if we can't help, one of the things we will do is we will encourage them to say, listen, nothing to say that in 6 months, 12 months time, but I think, get this data, start keeping these records. And we see in different markets as additional things such as VAT being introduced, they start to give additional data sets, and that again gives comfort and how you capture that.
Yeah. So we talked about the challenges that SME face in terms of financing. I'm you also have to deal. I'm sure you also have to deal with a lot of challenges as well. So how different is your challenges from what you see across with SMEs?
So fundamentally, we're an SME as well. So you have different challenges. I think the challenges when started Beehive were multifold. And really, the first one is we brought a new concept to the market. And when you're the first to market, there are plus and minuses. The plus is obviously, you're the first to market, you're the first talking about it. The minus, the corollary to that is that you're the person that has to almost create the market. You're carrying the marketing for the whole industry, not just for your own company. You have to educate the market. So you spend quite a bit of time just educating before you can even talk about your individual business. So that was a challenge, first of all, trying to introduce people into that concept. And when it was 2014 and we launched, everybody was, it was cream and soup. it was, everything kind of moves in phases. So that was one of the challenges, is getting people comfortable. Obviously, we have two customers as well in a peer-to-peer model. So on the one hand, you've got the SMEs, but on the other hand, you've got the investors.
True.
So from day one, you are reaching out to SMEs, talking about, hey, this is a proposition that may help you. We want to make it as easy as possible, and it will be very similar to dealing with the banks in terms of what you have to do and how you make repayments, etc. Right? Because you have to remove the friction. For investors, it's a completely different proposition because you are opening up an asset class which they normally don't have access to. Right? So the individuals are the bank, and to do that, you've got to create an awful lot of trust. They've got to feel comfortable that, they're not giving you your money and you're walking out the door with that money. So a lot of it was building up the trust, building up that liquidity so that we could lend to the SMEs.
Yes, of course.
So a lot of it is maintaining, I always used to say it's like a three-legged race, right? You have got to move. Sometimes getting that middle leg moving is the hardest thing, right? But that was a challenge for us in the early days, because being a new concept meant that our biggest frustration is that we didn't have enough liquidity. So we had enough demand. Enough SMEs wanted to borrow, of course. But, we constantly needed more and more liquidity in order to facilitate that.
I mean, for an investor, it's also hard when when it's new, there's not a track record. So how did you convince them?
Yeah, so again, I think the real answer is over time.
Okay.
Yeah? So ultimately, everything is about performance. So whilst we weren't a balance sheet lender, i.e. we weren't lending our own money, ironically, when you are operating a peer-to-peer model and people are lending over your platform, you still have to act as if you're a balance sheet lender, because of course, if the loans start performing badly, the NPLs, defaults spike, then of course the people won't lend over the platform anyway. So you have to still have the attitude of, well, whilst it's not our money, we cannot, let our investors down. Otherwise, they are, they're the source of liquidity, and without them, we don't have a business.
Yes.
So it was really about just building up the performance of the book, managing the book well. And, if I look at the last 5 or 6 years, the average net return for an investor on our platform has been just over 10%.
That's not bad.
And 10% dollar denominated, which essentially this region, GCC is, in particular, I think it's quite powerful.
Yes. Yeah, it was a good asset class then.
Yes, it's done well.
And so you talk a lot about the SMEs, and I'm sure many SMEs have been successful because of this little help that you have provided them. So can you share some story of success, and specifically what else made them as well successful?
Yeah, so we've been fortunate enough to help finance and a number of businesses, as you'd expect, and I think some of them have really gone on across the region and established strong brands as a result of that. And we were financing them either in the early days or they're still existing kind of customers of ours. So comes to mind, I think people like Squat Wolf. Squat Wolf have been incredibly successful in the region and outside of that. I think they've grown exponentially. We've probably financed them 3 or 4 times. So again, typically they've come, we financed, they've repaid, they've gone again, refinanced, and all that has been helping them grow, right? Because as a brand, they've really kind of carved out a market. I think they're very well respected, and they just need, as a lender, you want to be lending to companies that are using that to really fund growth.
Yes.
Right, and aggressive growth. So I think that's a company that's done exceptionally well in that case. We've helped fund Koita, which was on the milk and kind of consumable side, in the food and beverage side. They've expanded not only in the GCC, but in Iraq and wider territories. So again, they've been incredibly successful. I think they're now going to the US.
Okay.
As well. So again, we look for businesses that we believe that we can help fuel their growth, because they're on exciting growth tracks. They are looking to normally enter new markets or bring new lines, new product lines to market. So they've got a clear understanding as to why they're taking on and the lending and what they're going to do with that.
So you're mentioning many of these SMEs that wanted to go regional and even global, all the way to the US. And we've seen the importance of having solid a solid infrastructure, specifically for them paying and getting paid, right? And in terms of payment technology. So how do you see them adopting some of these new technologies in terms of being able to expand and scale globally?
Yeah, so I think that dovetails quite heavily with businesses understanding how they're going to be funded and how they use technologies to grow their business. So what I mean by that is, if I look at a lot of businesses now, a lot of SMEs, a lot of times it's understanding what type of finance do you want to take, right? Because if a lot of your business is going to be conducted over POS machines, right? Or online gateways, so of course you're using the payment infrastructures, which of course you will know,
which we know very well, yes.
About. But that then becomes important, because for lenders, it's a lot more data points. And the more data points and the more analysis they can do around the data points gives them more comfort when it comes to lend. So the ability that they can see a lot of your transactions going over a POS machine, for example, right? Less in cash and more over POS gives them a lot more comfort about, okay, so, right, revenues are growing, but also patterns.
Yes.
Okay, so it drops in the summer, right? Okay, fine. It boosts again in September. So suddenly the lender is looking to match the type of product that they will offer you to the type of company you are and the type of requirement you have. Yeah? So it's not everybody's requirement to take a 36-month term loan.
Yes.
Right? Or, for some people, it's listen, we need purchase finance for 90 days for stock. But for others, it's we need seasonality. Yeah. So suddenly you can see that we ramp up these months. Therefore, we want to buy more stock because we can sell more stock. And the way that the lender gets comfort, because it looks at your previous year or the previous cycle, it can see that payment data, it can see the transactional history. They look at that and go, absolutely, right? That makes so much sense. And also, the finance product can then match to how much revenue is coming through the door of the business, and being able to try to match the repayment cycles back to the revenue cycles.
Exactly. And it goes back to what you mentioned at the beginning, is the information that SME should have and why they are asking for this money. And I think, the clean books as well that you mentioned.
Absolutely.
And I think, obviously, as people are shifting more and more to digital payments, then not only seasonality, but also a lot about what their consumer likes,
absolutely,
the demographics of their consumer. We work a lot with many of our key merchants around actually coming up with those insights from the data that they have from their transactions, which most of the time is not being used. Reality.
There's a wealth of data, and that data keeps getting added to on a daily basis, and everybody says, we should do something with that data, and business gets in the way. But I think sometimes the ability to step back, look at that data and say, okay, can we use this in a different way? Can this allow us to bring a new product?
Yeah.
Or quite frankly, almost the pop-up mentality, right? Sometimes if you can see that you've got 2 months to bring a new product out that's almost seasonal and has got a great opportunity, you would only see that if you were seeing the patterns from previous times.
Exactly. I'm going to shift gear a little bit and talk about the regulation. Obviously, you're working in quite a regulated industry. And we know they're important for fintechs. And they're important in shaping the fintech landscape. So how do you see the role of regulators in shaping the fintech landscape and specifically in increasing trust, security, and compliance?
Yeah, so I think one of the key words there is trust.
Yeah.
So for regulators, first of all, when new models come along, they need to understand them. And that takes a bit of time. So the typical friction, and this goes across markets worldwide, is that, first of all, tends to come the innovation or the idea. And then it is how that kind of bumps up against regulation. Does current regulation cover it off, or will it require new regulation? And does the regulator allow people to start operating from day one, or does it wait until it's written in the regulations? And that's why you tend to have things like sandboxes and those type of things. And I think that's a very sensible step, where if it's new business models coming in, then the regulator wants to see that in a sandbox, wants to take time to understand where's the pitfalls, where are the kind of compliance question marks. And at the end of the day, it's all about reputational risk.
Yes.
So we see, when we launched back in 2014, there were no regulations. Right?
Okay.
So there was no regulations for what we did across the region. Right? So not just in the UAE, but across the region. So, but one of the things that I did from day one is we interacted with the regulators.
Okay.
So we went to see the regulators to tell them, this is what we're doing, just to let you know. And I based our model on best practices out of the UK, which at that point already had some regulation around peer-to-peer and those kind of platforms. So we almost self-regulated ourselves, showed the regulators what we were doing, and then over the following years, the regulators brought in regulation and based it a lot around how we were operating as an operating model. But that takes time. You've got to build that trust, and it's communication, right? Because you've got to educate the regulator on what you're doing, and of course they will go and look at other markets, and they'll compare it to other markets, and they'll see where their comfort level sits. So I think that's one thing. And then the other thing from a regulatory perspective is fintech is such a broad church. So there are some people in fintech who are technology providers, right? So they don't operate a company. So regulation's irrelevant to them because they're just providing a piece of software. Whereas for others, if you're operating, then you need to get licensed and you need to be regulated. And then there's almost a third bit that if you work with existing financial institutions, then they may take care of the regulatory side, and you are bringing other skill sets. And that's kind of what's happened to us in different markets.
Yeah.
So in the UAE, we're regulated as a peer-to-peer a lending platform. Same with Oman, but then we also work with banks in Oman. And in Saudi, we actually work with a number of banks, and they are, the regulated entity, and we are helping them, bringing our skill sets. They have a customer base, they have a brand, they have regulatory oversight. And what we have is we have a skill set, we have technology and an approach that, so you bring almost the synergies of both parties together. And that's one of the things I see across the fintech landscape. I see more and more collaboration between existing financial institutions and fintechs to try to bring the best of both worlds together.
Okay. We'll come to this point, but it's interesting what you were saying around you started a model that was not regulated, but from day one, you worked closely with the regulator. We had also someone else on the show who's also a successful fintech from Kuwait and did the same. And it's obviously, I think, a real sign of being successful is having your stakeholders in the entire ecosystem fully aligned.
And I think what was particularly important for me as well is that when I set up Beehive, I was new to region. So it's not that I'd lived in the region for a few years, but I was new to region. So I was very careful as to who I brought on as the chairman. And the chairman was the ex-group CEO of one of the largest banks here.
Okay.
So again, from a credibility perspective, I think it's really important regulators see, okay, that person has attached their name to this company, therefore they must be comfortable with how this company is being run.
So you're talking about collaboration with banks and fintechs. We're seeing this increasing. Obviously, the regulatory aspect is important, but what else? What else was important in terms of you partnering with some of the banks in KSA or in Oman?
Yeah, I think it's about identifying strengths,
right,
of both parties. So, like a lot of disruption across many different markets, not just fintech, but lots of things, is, new entrants are typically disruptors. They are trying to shake the tree. They're trying to hopefully make things better, particularly maybe from a customer engagement perspective or remove friction out of process, whatever it may be. But ultimately, the established financial institutions tend to have a large customer base. They have a large amount of data, large amount of access, and they have years and years of experience, right, of dealing with things. And what it tends to come down to is identifying senior people in those organizations that believe that there is an opportunity for them to work with fintechs in the spirit of cooperation, with a shared level of ambition, right, and shared level of goals. And once you see that, and that's really what's happened with us, is sitting down with CEO of a bank who says, yeah, I want to do this. I think this is a good thing. It all starts at that level. Yes, you've got to work everything through, and that takes time. But unless you have that buy-in from the top, from the financial institution, and obviously you have the buy-in from the fintech, then if there is a kind of belief in it, then you can make it work. So for us, it was about how do we bring our technological approach, our startup DNA as well, speed at which we want to do things, and looking at solving the problems in a slightly different way. And the bank was bringing, that kind of maturity, other services as well, right? So if we're lending, then they can offer the banking services. So you are building a symbiotic relationship, and both parties have got to benefit from it. And I think once you can take that time up front to identify those things, then implementation becomes easier.
Yes.
It's not without its challenges. Any kind of cooperation will have, a partnership will have challenges, but it starts from identifying where you want to go. Start with the end in mind.
Yeah, that's and we've seen many banks. We work with many banks across the region, across the MENA region, and a lot are interested in SME financing, but obviously, most of the time are maybe a little bit more risk averse towards that. So you probably also bring the trust and the I would say the track record as well for SME financing.
I'd be lying if I said, it was my charismatic personality why they signed up. I think it was more to do with the performance of our NPLs.
Yeah.
So again, you have to establish a track record, right? And that's why, I think if you're doing anything like lending or those type of business models require a certain amount of track record before a bank will partner with you. So we look at the conversations we're having with numerous banks as we go forward now for potential new opportunities. Nearly always starts with, how's the book performed? What's your NPLs? Right? Once they see that and they get a lot of comfort, then the conversation flows from that point.
Yes, of course. So talking as well about the ecosystem for SMEs, and I mean, you talked about the challenges. I think there is also an opportunity for the broader ecosystem to support and help the SMEs. So from our perspective, for example, at Visa, we've created for Africa specifically a fintech accelerator where we bring in fintechs and really support them not only in terms of the mentoring or the coaching, but also creating synergies with our existing partners, opening up new markets. Just finished the first cohort, and we're ongoing with the second cohort right now of 20 to 25 fintechs from across the region. What do you think more should be done in terms of mitigating the risks for SMEs and fintechs and startups, but all of this to build a more resilient entrepreneurial landscape, you as a serial entrepreneur as well?
Yeah, so I think if we look at the fintechs, first of all, I think the important thing, and I think accelerators, particularly with mentorship, right, is very important. But what is important is making sure they're getting a broad kind of base of experience, because there's many a business idea that on paper feels like a no-brainer, right? It's when it hits the real world that it becomes difficult. And it's understanding whether your business is a feature or it's a business, right? Because again, if you can bring something that is unique, or you bring a different approach or a different solution, quite frankly, create a different solution, that has an awful lot of value to existing financial players. If you are just a feature that a bank can buy off the shelf 3 months later, that's dangerous, because you're going to try and build a business. You don't have any USPs, really.
Yes.
And the bank can turn on a feature. Yeah, the bank may not be the first to market with it, but by the time the bank turns that feature on, it can kill your business. So it's understanding and being realistic. And this is why I think accelerators and mentorship programs is also about helping the entrepreneurs get to a place of, yes, I think I've got a good business, I've got an opportunity here. Or, and they might not like to hear it at times, which is, I think you're going to struggle, right? I know on paper, I know on a PowerPoint slide, it all stacks up. And I know you've done if we only get 2% of the market, we're going to do, 25 billion in revenue. It's just a lot harder than that. So I think it's good that we get more and more fintech players. I do believe you will see more and more collaboration as the probably most effective go-to-market. Particularly then when you look at the VC community and the way that things have moved in private equity, that path to profitability, the expectation of that a lot sooner than it used to be. Gone are the days where you can just burn through cash and not really have a plan for profitability. So again, people have got to be mindful of that. So I think for the fintechs, it's great that there's more and more coming, and I think the accelerators are particularly valuable, but it's also about helping them identify not only, do you have a good idea, but how are you going to take that to market?
Yes.
How are you going to build that business that's worth X or achieves Y, and have a kind of clear path to the end state, whatever that end state is. I think for the SMEs, one of the challenges, SMEs are so important to economies. They drive the majority of employment. They drive the majority of GDP. The problem is they typically can be at the bottom of some longer supply chains. And they sometimes struggle because some of the larger organizations hold on to their cash. They don't pay their invoices when they're meant to pay their invoices.
Yes.
And the SMEs focus on the revenue but ultimately cash is king in anything. So the more that we can help SMEs and their customers just understand that an efficient supply chain and efficient payments cascading down the system helps that SME reinvest that money to be a stronger supplier to the business who might be a supplier to another larger business. And the stronger your kind of supply chain is, the better it is for all parties involved. And the more that is encouraged, I think it will strengthen economies. It will give SMEs more confidence to hire more people, right? Invest in more innovation, provide more services. Because I'm reminded of something we've just funded recently, where a really big contract has been won by the main contractor, and they'd selected their subcontractor, and it's a big opportunity for everybody, but the subcontractor just didn't have the working capital to be able to start off the project.
Okay.
So it's almost the biggest frustration. So and it's a big deal for them. So they can see this big deal, it's there, they've been selected, everything's great, and they go, yeah, but we need, X amount of millions of dirhams in order to finance this, to get it going, because we don't have that. And we were able to step in and help them with that. So, but that's only because we understood as that project went up, right? So that's an example of, there are plenty of SMEs with innovation and products and offerings, but if they don't feel confident that they can get access to finance, or they can fund their businesses and get paid on time, then it just makes them more cautious, and that caution ripples all the way through.
And they will miss on opportunities, many opportunities to help them actually grow even more. So you mentioned POS financing, which was interesting.
Yeah.
But if we want to think of the future of the financing landscape, right? We know that it's evolving.
Yep.
Obviously, the global shifts, but also some of the technological advancements that are happening. So what are the predictions that you can make in terms of what is the future of SME financing?
So I think a couple of things. You're right. Obviously, the technology is moving all the time, right? And people are finding new ways to interact with their customers. I think what you need to see, particularly in this region, is faster movement to digitization, right? Online payments. Online payments is huge, say, in the West, right? But you still have a very large cash economy in a lot of the countries in this region. And there is a cost to cash. That's the flip side, right? So the more you can reduce the cash handling and those kind of things, then you can take that and pass that back to your customers. So I think as more companies look to move to digitization, and I think, that also goes hand in hand with making sure that the customer experience is still strong. You deliver what somebody orders, right? So I think some of the cash on demand is a reaction to that. But it will streamline lots of areas of the economy. I also think that for SMEs, they will start to take the right finance product for them. Yeah? So again, some businesses, short-term finance. That's all they need in order to move through cycles. Others, it's a medium-term investment, therefore don't take short-term finance. And this is where a lot of SMEs in the past have got into difficulty, because they've taken the wrong type of finance product, and then situation has changed and they're not able to meet their commitments. Yeah. So match your financing requirements to the lending that, the borrowing that you take.
Yes.
I think that's really important. And on technology as well, it's finding there's so much data. It goes back to your point earlier. There's so much data, and it's trying to identify where technology can remove friction from a customer experience versus where technology is just a nice to have. Will the technology actually change behavior or not? Because I think a lot of times, sometimes people bring out features, right? And they think it's going to be really move the needle, and it doesn't really move the needle because it isn't addressing a fundamental requirement. It's almost a solution looking for a problem. The important thing about technology, because all technology is just an enabler, right?
It's true.
At the end of the day, what is software? Software are manual processes repeated over and over again and then digitized. That's what software is. So ultimately, if you can identify, okay, this is a proper problem that customers are seeing, so let's have a solution that addresses that rather than, hey, our product team have just come up with this and it's great, why is this not flying off the shelves? So it's more about really matching and taking the time to identify, and hopefully that's what the data does, right? The data allows you to understand what do the customers
exactly
want, what do they like, what will they pay for as well.
Yes.
And there might be certain features they say they just won't pay for that, right? Because they can get that elsewhere. So and that comes back to analysis.
It's interesting is that I think it's the founder of Waze who said you should fall in love with the problem and not the solution if you want to be a successful entrepreneur.
No, absolutely.
So talking about the future, the future of Beehive as well, I would be interested to know about more in terms of, so you've had a majority stake acquisition from eAnd.
Yes.
Any new markets in mind? New product, new financing products?
So I think we'll always look to bring out new products. So again, going back to my point before, which is, when customers are coming to us saying, oh yeah, I think, can you help us in this area? Can you help us in that area? The more we hear of comments like that, the more you start to think, okay, so there is a problem. Right? And if that problem is large enough, then it's worthwhile building a product around it. So we will continue to bring new products out into the market. We will look to do more and more partnerships and collaboration because, again, I'm a strong believer that we can bring a lot of value to financial institutions and they can bring value to us. But because it's almost about sticking to your own knitting, right? I think whenever you look at partnerships, if both parties are more or less sticking to the BAU, it becomes a lot easier for everybody to make it work. It's when you suddenly, expect people to act differently or do different things that you get bogged down in kind of paralysis by analysis. So we're looking at more partnerships. And I think when it comes to new markets, we will look at market potential, whether that's through our, kind of eAnd connections, or whether it's talking to institutions that are already incumbent in those markets, and we believe that we can bring something of value, and they can bring something of value to us. Because again, I think market entry is tricky at the best of times. In fintech, it can be tricky from a regulatory perspective. So you want to look at the least friction of market entry, particularly if you want to test that market. Yeah, and I think it's the testing. Because another thing about being an entrepreneur or having a startup kind of culture and DNA is if you're going to fail, you want to fail fast. Yeah, we don't have. Dare I say it? I can't have meetings with 25. I can't have 25 people in a meeting to have a meeting about the next time they're going to have a meeting. People will come into my office. We'll get on a whiteboard. By the end of the day, we'll say, right, we're launching this product, and we'll have a product launch in 90 days. So the mindset is speed. And then if we get 45 days through that 90 days and say it doesn't work for whatever reason, we can it, right? We don't go, oh, well, we've sunk 45 days. No, you just can it, right? Because you don't have the time. Opportunity cost is actually one of our biggest costs.
Exactly.
So, I think the future is more collaboration, potentially more partnerships, looking at new markets where we believe we can make a difference, not to make up numbers. But yeah, no, I'm very optimistic, and hopefully as a region, across the region, there are some challenges in certain markets, but I think growth is there.
Yes.
Some markets are particularly growing fast, and others have got that potential. So a lot of it is about just tapping into that and just opening up those opportunities.
And the opportunity, like you said, is massive.
Yes.
I'm going to shift to our final question, which is our pivot question. So you're a serial entrepreneur, founded a few businesses. One of them was actually acquired by IBM, now a big partnership with E&. So you've always wanted to be your own boss.
Yes. Yeah. No, probably when I was a teenager. I don't know. I just had, and obviously I'm not a millennial. I'm a Gen X. So at that time, you didn't tend to know people that were their own boss. Really, you know, most people work
for someone.
For larger organizations or kind of SMEs. So I think sometimes if you have the belief that's what you want to do, I had no idea what I would be doing. I just had a fairly strong belief that I wanted to work for myself and I would at some point find an opportunity to do that.
And so what would the younger Greg say about Greg today?
Yeah, I think he'd be relatively happy. I mean, you know, he might have a few comments here and there, a few critiques, but no, I think generally it's been, you know, you only do something like this if the upside kind of outweighs the downside, right? And you have more good days than bad days, because a lot of times entrepreneurship, people see the results, right? And they say, oh, it must be great and it's fantastic. But it's 1% kind of inspiration. It's 99% perspiration, right? It's just hard work, and what you've got to do is you've got to make sure that you put together a good team, and you've got a clear idea on what your proposition is, and you've got to have a passion for what you do, because if you don't have the passion, you won't get through the tough times.
Yes.
And there's always tough times.
Yeah.
You know, the business I talked about, the previous one, sold to IBM. You know, so many times we're that close to going under, right? And that's because just the machinations and what you're trying to do with the business. But, you know, you've got to lead. So you know all the details of, we're not in a great position. But you can't go in and tell the staff that, right? Because you've got to inspire, and you've got to make sure that everybody's pumped up and everybody's doing the best they can. So it's really important to just have that, as I said, that passion, that belief, and that focus. And, you know, ultimately you've got to lead. The rest of the team they'll do their jobs, but leadership is really important.
With that, Greg, I want to thank you so much for coming on the show. I think it was truly enlightening. And I'm sure many entrepreneurs and many SMEs have been inspired by your story, but also by the impact that you're doing across the region. Thank you very much.
Thank you.
Thank you for joining us today. We're committed to providing you with fresh and bold insights from our region, so don't miss our next episodes. Until then, stay informed, stay inspired, and always strive to stay ahead of tomorrow. Thank you again for watching and listening to Access Tomorrow, brought to you by Visa.